After a week of wild swings, where will the tariff rollercoaster go next? Markets have staged a recovery this Tuesday amid rumours that US trade negotiators are ready to start talks with a number of countries about getting those tariffs dropped. But some traders are still weighing the prospects that things could still get worse. Kathleen Brooks is Research Director at XTB. Kathleen, we've seen something of a recovery in markets today. What's going on there? Are traders starting to hope for a trade deal?
I think so. I think that we've got a bit of tariff fatigue going on. I think after the speed and the velocity of the moves that we've seen over just three trading sessions, I think that's been enough really for investors to just pause right now and for traders to take a pause, assess what's going on. It's very confusing what's coming out of the White House. There's a lot of different messages from different people close to President Trump and from President Trump himself. So I think that there's tentative signs, not necessarily of progress, but that we're in a better position than what we were on Thursday. And I think that's the key thing that's helping to stabilize markets. But it's going to take a lot more recovery from here to make up for those losses. This is just the beginning, if it is the start of a more prolonged recovery.
Do you think then that US stocks were overvalued to begin with? Could we still have significantly further to fall?
I think it's really interesting that the stocks that led the US market lower for most of this year, but particularly in the last kind of 3 or 4 trading sessions, have been those tech stocks. They were richly valued. They have the highest valuations of global markets, let alone US markets. And they were the ones that really took a hammering. But, does Apple, with its huge balance sheet, it's almost bulletproof as a company, did it deserve to fall nearly 20%? I think some people are reassessing that. The market's certainly overstretched to the downside. They always do this. And then you see some sort of recovery is likely to take place.
Currencies have been particularly volatile in recent days. Today the dollar was lower. Are traders slightly losing faith in the US as a safe haven perhaps, or in the dollar as a safe store of value?
I think that was a theme that really started at the beginning of the year. I think people were looking for the dollar to continue to rally into 2025, and that didn't happen. Now, the downside in the dollar was turbocharged somewhat by the reciprocal tariff announcements. That was seen as being very bad for the dollar. And then at the start of this week, we saw this rush for dollars. That really was a sign to me that we were in market capitulation. So it was a sign that, yes, there might be a bit of de-dollarization going on. The dollar might be falling, but equally, the dollar is still the world's reserve currency. And when people rush to the dollar, that's usually around the time that that kind of markets might have bottomed. So I think that there's a lot of volatility going on at the moment with the dollar, but I think the downtrend is still possibly lower, but I think it will depend on how, we are headline driven in the FX market at the moment. So it will be the outcome of these negotiations. If they're bad, then you potentially could see some dollar strength because of this rush to dollars, rush to it, making it as a safe haven.
President Trump has often said he wants to see the dollar go lower, partly to counteract the effects of these tariffs. Does this seem intentional?
I mean, it's just so hard. I'm certainly not a political analyst, so it's hard to tell which way things are going. And it's worth remembering the FX market is the biggest market in the world. It's the most traded market in the world. So there are lots of different things that drive the market. I think that certainly it's hard to suggest that just one government or one person can make the dollar go down. I'm not sure that would be a rational explanation, but without a doubt, President Trump's unorthodox economic policy was certainly driving outflows from the dollar into, certainly eastwards and into Europe as well.
Are we seeing, though, a broader change in trade that might weaken the role of the dollar as a reserve currency in the longer term, or is there simply no other alternative?
It's hard to see an alternative. Remember, it's the most traded currency. The vast majority of transactions are done in dollars, and it is the trading currency. But what I think is really interesting is that if these reciprocal tariffs, if they remain in place for the rest of his term, then what we'll see is we'll see deals made between other countries that won't necessarily involve the dollar. Why would they? If Europe is doing more deals with Asia, for example, they wouldn't necessarily need the dollar, and especially the volatility there that they can't control. So I think we're far away from it now, but it's certainly within the realm of possibilities at this moment, but it's not a reality yet.
That was Kathleen Brooks of XTB. Don't forget, you can watch more videos on Reuters.com.